Welcome back, everybody, to the 8th episode, the 8th one of the Robinhood $500 challenge, where I'm trying to grow $500 as much as possible with an additional $250 tossed in there once a month. Now, last time I spoke with you guys, I wasn't doing so hot. Trade talks weren't going great, so I was riding the slippery red slide down, but I'm doing a lot better now, and this chart's a little bit inflated. I received a free Berkshire Hathaway. Do we have a guest on today? You guys want to meet Watson? Come here, buddy. This is Watson, everybody. Some of you know him, some of you don't. Say hello. Can you give a kiss? He wants me to take him on a walk. He's gotta wait a minute. Okay, I'll take out a minute. What? So my chart's a little inflated. I got a free share from one of you guys. Thank you very much. So it inflated it by about $199, so even though it says about 20%, it's actually more like 11%, which isn't that bad. I'm out of breath from lifting that fat guy. Whew. So I'm up about 11% since last time we spoke, which is pretty good, especially considering how that's still diluted from me adding $250 last month. So I'm doing a lot better, guys. I promise. This isn't some thin veneer. I'm actually doing good. Okay, so I didn't realize it was actually going to inflate my Robinhood chart like that, so I've stopped sharing my referral link. Instead, I've started taking my subscribers' referral links and sharing them everywhere. If I were to continue sharing mine and I got more shares from doing so, it's just going to inflate my Robinhood chart and it's just going to ruin this whole thing. So if you want to have your referral link tossed around, put in my video descriptions and flaunt it all over our Discord, then go ahead and join my Discord. You'll see a channel called Free Stock and it'll explain the rules there for you. So if you're interested, I highly recommend it. In fact, one of my Discord members today, Monk, was just talking about how he got a few free shares from doing that. So it's worth your time. And it's fun because you get to talk to all different sorts of traders. So again, highly encourage it. Okay, so let's get into the actual trades I've been doing. Let's look at the couple of the most recent ones I've done, and let's look at one I'm currently in. So here's a really good trade I did fairly recently. This is on Bank of America, BAC. The first thing that caught my eye when I looked at this chart when I was flipping through my watch list was how it's trading in this sideways channel here. The goal of every trader and every technical analyst is to identify a trend as early as possible so that they can hop on that trend and ride it for as long as possible. There's obvious points where it tends to change direction, so that makes it really easy for me to identify the trend as early as possible, or somewhat easy. And you can see, that was the first thing that caught my eye, and you can see when I actually bought into this trade, which is right where that red arrow is, but I didn't just use the fact that it bounced off this level of support down here. I used several other different technical indicators to tell me that this is a good buy. So let's take a little bit of a closer look here. All right, so down here at the support, there's a lot of buyers down by the $27 price level, waiting for the price to go down, and they buy it up every time it touches near that price level. So as it's dipping down there again, I'm waiting for it to get rejected around the $26.50, $27 area, around there. And you can see it goes down, bounces up, gets rejected, goes down again, gets rejected again. The bulls are standing their ground as the bears, as people sell off the shares, the bulls are there buying them up as soon as they hit that price level. They're standing their ground. There's no crack in their defenses. The bears are having a hard time pushing below that price level. Goes down, gets rejected, goes down, gets rejected again. So that's showing that that level of support is holding. But then it pops above this 9 exponential moving average. This 9 exponential moving average here, this blue line, acts as support when the price is trading above it and acts as resistance when the price is trading below it. And you can see that if you look back a little bit, you can see how it acts as resistance as the price is below it. Back here, the price dips down, goes below the 9 exponential moving average, the 9 EMA, and stays down and continues to be in a downtrend, goes up, gets rejected, goes down, goes up, gets rejected, goes down, gets rejected, goes down, then it busts through. So when it's below that moving average acts as resistance, and it tends to indicate that it's in a downtrend. The opposite, when it's above that moving average, it tends to act as support, and the stock price tends to be in an uptrend. So far we have rejection of a support level, a price support level. We have a bust above the 9 exponential moving average. Now, if we look down here, we got good volume, so nothing to be concerned there. Look down even further. Sorry, just hit you in the face there. Looking at the RSI, the Relative Strength Index, there's a couple of things that this indicator is telling us. First of all, it was oversold and it's pushing away from that oversold area. That is typically a buy signal. But not only that, we also see some bullish divergence, which we've talked about before and we love. It is the creme de la creme. It is so good. I love bullish divergence. Every time I see it, I get hard. So if you look down here, you can see bullish divergence. And what that is on the stock chart, you see lower lows. So right here, you see one low, then you see a lower one there. But on the RSI, you see a corresponding higher low. So with this low, there's a corresponding low there. With this lower low, there's a higher low down there. So they're going the opposite directions. That's bullish divergence. And that is saying that there's possibly a more bullish sentiment in the stock than what is being depicted simply by the stock price, the price action. So cool, we have a bounce off a support level. We have a bust above the 9 exponential moving average. We have bullish divergence. We have a push away from an oversold level on the RSI. And then if we look down here at the MACD, the moving average convergence divergence, you can find another buy signal where the faster moving average crosses above the slower moving average. The faster moving average is the blue one. And what I mean by faster is, well, here we can just take a look over here. If I hit Control E, I can see all the studies, all the technical indicators I have, and I can search new ones if I want to. Here's what I mean by faster. I have on my chart 2 moving averages. I have the 50 moving average, this yellow line, which is essentially saying that at any point on this line, it's taking the last 50 closing prices and averaging them out into one single price. Putting that point on the chart and doing that every day, and you put those points together, it forms a line. So that's the 50-day moving average. Now the screen one down here, you can see that right there, is a 200-day moving average. That is a slower moving average. When it takes into account more days or more units of time, because you might be looking at averages on like a 10-minute or a 15-minute chart, whatever. If it takes into account more days, that's going to mean it's a slower moving average. It's not going to follow the stock price as much. With the 50-day moving average, it's going to follow it a little bit more closely. It's smoothing out the price, and it's going to follow it a little bit more closely. The 200-day is going to be trailing behind it. It won't be as responsive to changes in stock price. So when I say faster moving average, I just mean it's taking into account less units of time, 50 days as compared to 200. So down here in the MACD, we're seeing a fast moving average, the blue one, and a slow moving average, the tan one. And when the fast moving average crosses above the slow one, that is a buy signal. And you can see that because this starts turning green over there. So we got that buy signal. If you saw that occur on the stock chart up here, that would be the same deal. So back over here, this fast moving average crosses above the slow one. That is called a golden cross, and that is a buy signal. You can see the opposite over here where the fast one crosses below the slow one, and that is a death cross, which is a sell signal. So bounce off a support price level. We got a bust above the 9 EMA. We got bullish divergence. We have a oversold on the RSI pushing away from oversold. We have a buy signal on the MACD. That's a lot of information we have going for us. We're building a case to defend our buy suggestion. We're trying to build a case here to defend our bullish position in the stock. We don't want to be biased. So if we notice one bullish thing, but the rest are saying no, we're not going to try to find something to justify us going long. We want to unbiasedly build a case, see if there's an actual case to be built to suggest that we should buy into the stock. So we have a lot of things going in our favor saying this is a buy. One thing I also like to do is pop between different time frames. So we're looking at the daily here, and you can go up here to the top right and choose a time frame if you'd like up here. Or if you want to, you can do multiple charts over here to the right. So I can do 2 charts, and I can look up the same one. I could do Bank of America and choose a different time frame. I personally, when I'm not day trading, I don't mind doing it on the same chart. So I'm just going to flip down to the 4-hour time frame. Now, on the 4-hour time frame, you're going to see more noise. You're going to see more information. In fact, when comparing the 4-hour to the 1 day, it's like comparing having your glasses on to taking your glasses off. With my glasses off here on the daily chart, everything's very smoothed out. You're seeing thousands of minutes of price information being compacted into individual candles for every day. So it's very smoothed out. When I flip back over to the 4-hour chart, I'm now putting my glasses back on, and I'm seeing a lot more information. Now, a lot more information means there's going to be a lot more noise, so it could be a little bit confusing. I'll get more into that in a second, but you also get more information. You just have to be a little bit more selective with what you're looking at. So when I look at this guy, what I see is it's popping above the 50 moving average, which is good because that now, similarly to the 9 EMA, is acting as support. It's going to have a hard time pushing below it. It's going to carry it upwards. I'm also seeing that when I bought into it, it was showing a higher high. When it's in an uptrend, you're going to see higher highs like that. You're going to see higher lows. However, I didn't wait for the higher low, which might have been advisable. So Really looking back on this trade, everything was looking solid except for I didn't wait for that higher low, and that would have been the perfect setup in my opinion. Just about anyway. So I probably should have waited for that higher low, but we saw a higher high at least, so that was kind of a bust out of that downtrend. It shows some promise in addition to all the other indicators that were telling us buy. I mentioned a second ago how you see more noise, and you can see that here, that even though it pops above the 9 exponential moving average, it's constantly dipping below it. So you're getting these little miniature sell signals as it goes below the 9 exponential moving average, which aren't really justifiable. You're seeing a lot more fluctuation because it's such a smaller time frame, a lot more information, that you're going to see it go below the 9 EMA a bunch and give you these false sell signals. So you don't want to always look at the chop here and derive meaning out of it. You want to take a step back and make sure you're seeing the full picture. So don't use these little sell signals as reasons to go short on a stock or anything like that. You want to see the bigger picture as well. So you want to make sure everything's speaking the same language. 1 day, 4 hour, 1 hour, make sure they're looking at this, they're saying the same thing. So let's say I decided to buy in the stock, which I did. Before I do anything, I like to look at the 5-minute chart and see what the intraday price action, what's going on with the intraday price action. Is it going up? Is it going down? If it's going down and I want to go long in a stock, I can get a better price. I can wait for the stock price to go down and then buy into it, or I can set a limit order lower than the market price and let it trade down to that limit order, and then I'll buy into the stock once that price hits my limit order. So it's getting a better, what's the word? Getting a price improvement. I did it. I don't even know what I'm doing when I'm trying to remember. I'm just sitting here just straining. What's going on in my brain? I don't know. You get a price improvement. If the stock's trading, so like, let's add the VWAP onto here. So maybe this is a day where you're gonna buy into it based on the daily chart and the 4-hour chart, but you can look down here at the 5-minute chart and you're about to buy into it at the market price, but you're like, maybe it's a little bit overextended the VWAP. There's usually a lot of volatility at the beginning of the day that tends to correct itself. Let's set a limit order down at the VWAP. You know, instead of buying at $30.70, we're gonna put a limit buy down here at $30.50 or something like that. Well, then maybe in this situation, it goes back and actually does revert back down to the mean, back down to the VWAP, and you get that, what, 30.72, you know, 20-cent price improvement. It's not a lot, but do that over a lot of trades and you're sitting pretty. The cheaper price you get in, the more money you're gonna make if it goes in your favor, the less you're gonna lose if it goes down. So just using your noggin there. So I did that with this trade, although I was doing a debit call spread. I set a limit order $20 or $30 below the price that the spread was actually currently trading for, and I got that price improvement. If I had to hop in immediately, I would have initially lost $30. That sucks. Instead, I got this awesome price improvement, and it helped me make $130 in the end instead of just 100. Just 100. Okay, that was my solid trade. Everyone pat me on the back. Made $130, got in here, got out there, would have sold if it broke below that level of support. Overall pretty good. My next trade was a bit of a train wreck. So this is Lowe, LOW. Let's get rid of the VWAP. So I bought in, you can kind of see it. Let me zoom in a little bit. I bought in at that price candle right there, and we'll come to see that was a bit of a problem. The initial thing that made me interested in the stock was that it was trading pretty close to this level of resistance up here, and it turned away from it. You can say that it was bouncing off resistance. You could argue that it wasn't. You can't exactly say for sure, but it wasn't as close as I would like it to be. But I was starting to notice that the trend was changing, and I wanted to hop in onto that change in trend as quickly as possible. On top of that, it also busted below the 9 exponential moving average, which is now acting as resistance. And it was pushing off an overbought signal on the RSI, and we got a sell signal on the MACD. So I was hoping to go short on this one or buy a debit put spread, which I ultimately did. I also noticed that there's this huge gap right here, and when it gapped up on earnings overnight, when that happens, stock price tends to close that gap. In other words, when it gaps up like this, it tends to turn around and fill all the prices that were not touched when it gapped up. So it's going to turn back down and go down and close that gap. It probably eventually will. You know, odds are it's going to trade within that price range again at some point. Those are all the things that were stacked up telling me this might be a good sell or to buy a debit put spread. Bet on the stock going down. My real issue was the overbought signal and the crossover in the MACD were like a week and a half, 2 weeks prior to me buying that debit put spread. On top of that, it busted below that 9 EMA quite a few days prior. Really, all I'm trying to say is I got in probably too late. Like I said earlier, you want to identify a trend change as quickly as possible and get in as quickly as possible, I was really slow, and that alone should have probably made me think twice before hopping in. On top of that, it was trading above the 50-day moving average and the 200-day moving average. So on a more longer time frame, longer time horizon, it's probably in an uptrend. So that's not necessarily in my favor. And then on top of that, if I hit Control E, type in comparison, change this to SPY, the S&P 500 ETF. I can see that this push down and this push up is heavily correlated with the market. This is the S&P 500. It's not showing relative strength or relative weakness. It sold off with the market, and then when Trump started saying trade talks are going great, people bought it, and quite literally bought it, and it went up with the rest of the market. Now, if you see this going its own direction away from the market, that's showing relative strength if it's going up or relative weakness if it's going down. And that means that there's something going on with the company that is unique to the company, and the stock chart is telling you unique information to that stock. And when you see that relative strength or relative weakness, it is a really good defense for the story that the stock chart is telling. So if you see it doing its own thing separate from the rest of the market, something's going on and you might want to capitalize on it. You don't have to see it with every trade, but if you do see it, it's telling a very strong story. So listen to what it's saying. Maybe do a little digging, see if there's any fundamental reason why this stock is going its own direction, or just capitalize on it if other indicators tell you that it's a good buy or sell. So I bought a debit put spread. I actually made good money. You see this hammer candle down here, which is a bullish indication. It sold off, sold off, sold off. Buyers came in, pushed it right back up and above opening price. So that's a bullish signal. On top of that, it busted above the 9 exponential moving average when trade talks started going well. So you can see how a fundamental aspect drives a technical aspect, in that trade talks were going well, supposedly, or Trump was talking about how they're going great. And so it busted above the 9 exponential moving average, which is a buy signal. And for me, it means I should sell my debit put spread. So I should have sold my debit put spread when it busted above the 9 exponential moving average, and when obviously the market was starting to rally. So I should have sold. I didn't. I waited a few more days and ended up incurring about $110 loss. So I gave up basically everything I made on Bank of America. Oh, yeah, go knee. It's not that big of a deal. Okay, let's look at my last one here, Roku, that I'm currently in. So this highlighted candle is when I called it out in my Discord. I saw that it pushed up about 5 or 6% on high volume, above average volume. There was a buy signal in the MACD, and it's pushing away from an oversold area on the RSI. So it had a lot of momentum to it. High volume, big percentage move, and it closed near the high of the day. A lot of momentum behind this. So I called it out in my Discord. I bought in the following day, just a few shares, and I set a 7% trailing stop loss. And now it's gone up enough that I'm actually in a free trade. Even if it turns around and hits my 7% trailing stop loss, I'm gonna make $1 or $2. So I literally can't lose. And that is so nice. Thank you, Robinhood, for adding that, man. Oh, so I'm up about $30 in that one and have nothing to lose. That's absolutely beautiful. Thanks for hanging out with me, guys. If you learned a thing or two, consider smashing that subscribe button with your big fat fist. I think it's time I take Watson on a walk, though. And if you're feeling extra generous, you can follow me on Instagram at InTheMoneyAdam. I throw out a dank meme or two every once in a while. So until next time, I love you, and I'm not doing a box spread video, so shut up about it.